of a segment report report. Now, when preparing now this particular segment report, we should have various columns here. Basically, columns equal to the number of segments. Like maybe let's assume that we have a company. Maybe that company do have a product, three product A, a product B, and product what? C. And basically you're told that the management of the company has identified now these three products to be the reportable what? Segment, or basically to constitute now the reportable segment. Meaning that when preparing now the segment report here, we will be having columns equal now to the number of reportable segment, in which case now our reportable segment will be equal to, or will be the same with the product. Then we will be having a column here for elimination, Now this column here, we use it in terms of eliminating intersegmental transactions. For example, if at all maybe we have what we refer as intersegmental sales, sales by one segment to the other, all that should be eliminated in that column or using that column. And then finally we have what we refer as the consolidated column, So therefore you should have columns equal to the number of segment, an elimination column, and the consolidated column. The consolidated column is the same with the total column, columns. Now, whenever we are to present or to prepare a segment report, always we start with the sales for each segment here, of which now that sales is usually classified into two. We have external sales. When talk about now the external sales, this refers now to the sales made by a segment to the external customers, So we should record that for each segment, and the total now which we get, we take it to the consolidated column. Then we also record what we refer as intersegmental or sales or revenue. So when talk about intersegmental revenue, this is the revenue or the sales made by one segment to the other. What we have said is that this column here is basically for eliminating any intersegmental transaction, because by the end of the day, what you need to note is that if, for example, maybe you have a company which, for example, do have 3 branches, one branch make the sales to the other, purely we treat that as a transfer from one branch to the other, because a company cannot make sales to itself. So therefore, any internal sales or intersegmental sales should always be eliminated there, such that in the consolidated column, what we should be having should only be the external sales. So we then get the total. Revenue, the total revenue there for each segment, and then here we will be having now elimination for internal revenue. So mean that whatever we will be having there as our total revenue should only include the external revenue. So once now we have that, we proceed and record information about various items of income and expenses. So first of all, we have information about interest income. So we record it there, and then we get the total, we take it to the last column. So we also record information about interest expenses. Interest expenses is what in other terms we refer to as the finance cost. So finance cost or interest expense, this is an expense, and being an expense, we show it here as a negative because it's a cost. That is a cost there, and still we get the total there. Also, we record information about depreciation and amortization. Still, these are being a cost. We record it there as a cost. As a cost, we take it. We get the total. We take it now to the last column. So those are basically the other items of incomes and expenses which we need to disclose as far as each reportable segment is concerned. Then from there, we then proceed and record information about the segment profit. We record that information there, and if at all we have intersegmental revenue, or basically internal revenue, then we will be having something known as intersegmental profit. Now, that intersegmental profit will be included in these figures which we have there. So the intersegmental profit is the profit which was made by one segment as a result of the sales which were made to the other segment. So that should be eliminated there, such that what we have there in the last column should be the segment profit from external sales. So and then from there, if at all we are given some unallocated incomes, so when talk about unallocated incomes, these are incomes which have not been identified with any segment. We add that now at in our profit there in the consolidated column. And still, if at all we are given unallocated expenses, these are expenses still not allocated to any or identified with any segment, we deduct that from our total profit there, and then we will be having the net amount of a profit. So once now we have that, we proceed and then record information about asset. Remember, we have said that the other information which need to be disclosed as far as each segment is concerned is the segmental or the segment asset. So we record the segment asset, and then we get the total, we take it there, and then still we will also be given an allocated asset. When talk about an allocated asset, these are assets which are not identified with any segment. So basically these are assets which are co-shared. For example, if we have a company with like 3 branches, that company may be having one motor vehicle which is used by all branches. So that asset then it cannot be identified or cannot be said to be owned or to be controlled by a certain segment. So therefore it is called an allocated asset. So we take it there, and whatever we get as the total, we refer to that as consolidated. We refer to that as consolidated assets there. And then finally we should also record information about the segment liabilities. The segment liabilities, we record the liabilities of each segment there, each segment, and then finally we will also be given unallocated liabilities. Unallocated liabilities. So these are liabilities not allocated to any specific segment, and then we get the total there, which now will be the consolidated. Will be the consolidated liabilities. Will be the consolidated liabilities. So essentially that how we are supposed now to prepare now our segment report, and as you can see, it's very simple in terms of how we prepare our segment report. Remember, we have said that the main objective of preparing this particular segment report is to be able now to split those figures which are in the income statement in terms of how or in terms of segment. For example, the income or the sales which will be shown in the income statement, it should be split in terms of how it was generated, like in this case from the 3 product. We have said the main objective of this particular segment report here is to enhance the user's understandability of those figures in the financial statement. And therefore, what you need to note is that this particular segment report will always be part of the notes which accompany the audited financial statement, simply because you have said its main objective is to give a breakdown of those particular figures which are basically shown in the financial statement.